What is dollar cost averaging? Investing can be challenging. Even experienced investors who try to time the market to buy at the most opportune moments can come up short. Dollar cost averaging is a strategy that can make it easier to deal with uncertain markets by making purchases automatic. It also supports an investor's effort to invest regularly. Dollar cost averaging involves investing the same amount of money in a target security at regular intervals over a certain period of time, regardless of price. By using dollar cost averaging, investors may lower their average cost per share and reduce the impact of volatility on their portfolios. In effect, this strategy eliminates the effort required to attempt to time the market to buy at the best prices. Dollar cost averaging is also known as the constant dollar plan. How dollar cost averaging works. Dollar cost averaging is a simple tool that an investor can use to build savings and wealth over the long term. It is also a way for an investor to ignore short-term volatility in the broader markets. A prime example of long-term dollar cost averaging is its use in 401 plans, in which employees invest regularly regardless of the price of the investment. Dollar cost averaging can be used, for instance, investors can use it to make regular purchases of mutual or index funds, whether in another tax-advantaged account such as a traditional IRA or a taxable brokerage account. Dollar cost averaging is one of the best strategies for beginning investors looking to trade ETFs. Additionally, many dividend reinvestment plans allow investors to dollar cost average by making purchases regularly. Benefits of dollar cost averaging. Dollar cost averaging can lower the average amount you spend on investments. It reinforces the practice of investing regularly to build wealth over time. It's automatic and can take concerns about when to invest out of your hands. It removes the pitfalls of market timing, such as buying only when prices have already risen. It can ensure that you're already in the market and ready to buy when events send prices higher. It takes emotion out of your investing and prevents you from potentially damaging your portfolio's returns. Who should use dollar cost averaging? The investment strategy of dollar cost averaging can be used by any investor who wants to take advantage of its benefits, which include a potentially lower average cost, automatic investing over regular intervals of time, and a method that relieves them of the stress of having to make purchase decisions under pressure when the market is volatile. Dollar cost averaging may be especially useful to beginning investors who don't yet have the experience or expertise to judge the most opportune moments to buy. It can also be a reliable strategy for long-term investors who are committed to investing regularly but don't have the time or inclination to watch the market